Hello and a happy new year to all our viewers of London Direct. So let's get straight down into business. It's a busy week with both the Bank of England and the European Central Bank meeting, but what to expect? Well, James, we've got this Bank of England decision. I don't think anyone's really expecting much to happen. But there's lots of discussion around forward guidance, whether he's going to revise the target down to 6.5% in terms of the unemployment rate. Do you think that's going to be on the cards over the coming months?
I don't think so. Over the coming months, potentially. I don't think so, obviously, this week. I mean, this week, everyone's going to be looking at, okay, that unemployment rate has fallen quickly, a lot quicker than what we all thought it was going to. But I think we have to think that we're not at that 7% level yet, and we have no guarantees that the unemployment rate is going to fall at the rate it has been falling over the last few months or so. So I think there'll be time to take stock in what's going on. But I think the biggest worry we do have is that if we do reach this 7% threshold, which we could do a lot earlier than what we expected to, I think the big worry is the average earnings side. Unemployment is falling lower, but average earnings aren't going in the right direction. If that then triggers a discussion around monetary policy and you end up putting mortgage rates up or interest rates up, which then put mortgage rates up, we already have a huge problem with the cost of living here in the UK. So if that does then happen, that problem's going to be even bigger than before. So I wouldn't be surprised to see that threshold move to 6.5% at some point. But I think we still need some more information about how quickly this unemployment rate is going to fall going forward, because, okay, it's fallen quickly, but there's no guarantees we're going to keep going at that same rate.
But surely Carney's going to lose a lot of credibility. I remember we were discussing this in a previous interview that I just didn't see the point of it, because if you end up hitting that target earlier than you would like, then you're in a really difficult situation, and exactly that situation's arising now. So do you think that Carney and the Bank of England are going to have a credibility problem?
Well, I think one of the points are that it's never been said that this is a trigger for a change in monetary policy, and he very clearly came out and has said that inflation is an issue. That could be also another trigger for monetary policy moving the other way if we had a problem with inflation. So it's always just been a benchmark for a discussion around a potential change. And of course we can't ever move away from the fact that falling from 7.9% to 7% in unemployment is a positive thing. That is a good news story. But of course we need to make sure that in other areas of the economy we're moving at the same kind of rate. So I don't think it would be a credibility issue. He's always said that it's not an instant trigger for a change in monetary policy, and I'm sure he will stick to that. I still could expect to see a change in that benchmark level of unemployment, but still I think there's a lot of more figures, and of course 2014 could be very different to how 2013 was. We've seen very strong economic recovery. There's nothing that says 2014 is going to be the same as that.
Before we move on to the ECB, let's quickly look at the sterling. We've seen the UK economy outperform other European economies. Do you think that the sterling is going to be one of the success stories of 2014?
It almost goes back to what we just said, really, whether we can maintain that strong performance. Of course, what the pound's looking at the moment is it's looking at the fact that unemployment is moving a lot quicker than what we thought, which in the grand scheme of things means a change in monetary policy quicker than what we expected. So that's why we're seeing the pound rally so strongly, and you really look at it against the majority of other currencies, and it is one of the strongest currencies out there. It's been a long time since we've been able to say that about the pound, but it very much is. So I could see that continuing. Obviously, if we see something like a change in that benchmark rate of unemployment, that's going to take a big hit on the pound. But overall, I think we are still going to see positive numbers. Recently, we've seen the things like the PMI numbers, services, manufacturing and construction, all slow down, which is what we've expected when you've had such a strong year in 2013. So there will be a slowdown in those numbers. They won't all be as amazing as what we've seen in 2013. So that could taper off some of the big moves, but I still see the pound being stronger than some of the other currencies out there.
Yeah, let's just quickly move on to the Eurozone. Quickly, first, your call on the meeting. Are you expecting any action from Mario Draghi?
Well, we could see something. I mean, there has been a few rumours about a change in stimulus, maybe some more stimulus added. Obviously, we don't expect to see any movement in the rates now, but there could be more stimulus. Maybe not necessarily at this meeting, but there has been a few rumours. And of course today we've seen that CPI number come out, and the rate cut obviously hasn't done anything to quell those fears of deflation. That is still there. We've fallen from 0.9 to 0.8% today, so it hasn't worked from that point of view. So it would be drastic to see something, but it wouldn't totally surprise me if we did see something happen.
Explain this deflation scenario to me, because it confuses me, I have to be honest. Surely countries in the periphery need some sort of deflation because they're losing their credit fuel growth, they're also losing government spending. So how do you lump together countries like Spain and Portugal and Italy to countries like Germany when they have such different perspectives and different economic environments?
Well, this is the problem with the Eurozone as a whole. You can't do that. So when the Eurozone was brought in, no one ever considered it during a period of absolute financial meltdown. Now we have to consider these things in financial meltdown, and of course there is no answer to that question. You cannot lump Germany and Spain and Portugal and all of these countries into the same situation when it comes to a deflationary problem. When you're looking at inflation at a benchmark 3%, 4%, you're looking at unemployment at a 5%, 4%, and the economy is performing fine, then it's fine to lump everyone into the same thing, look at the currency, keep it strong, pull it down a bit, and manipulate it in that way. But the Eurozone was never made with these sorts of situations in mind. So there is no answer to that. You can't lump those countries together. So what the ECB has to do is try its best to try and make sure those larger companies, those bigger economies, can continue to drag everyone else along. So the inflation worries and the inflation problems, the ECB has to look at the likes of Germany, those bigger economies, and make sure they're okay first rather than look at the others.